Noon. It's Quant Trade Edge with the wrap-up for Tuesday, April 12th. This morning on Twitter, I had posted this chart of 15-minute crude oil, and at the time, it had looked like we had a divergence forming. It was basically this divergence right here, where this was one high, this was another high, and this was incrementally another high. And this is all nested within a bigger pattern, which is this wedge right here. So basically, if we were going to fail up against the boundary of the wedge, we had every reason to with these divergences, but we did not. And part of what was the distinguishing point there was this previous day high. If we were going to get stopped there, we didn't need to take out that previous day high. And taking out that previous day high set up a 4x trade. And this wasn't a great one. If we go back, there's a reason crude wasn't on our homework for a long 4x trade, and that's because this was not a great setup bar. We do have an appropriate tailor of this flipping back up, but after a red bar like that, it's not the greatest. I guess if you really want to interpret it, you could say it tested below this 2-day pattern and got rejected, therefore came back up with strength. That's kind of a narrative that you do if you consistently do your homework every day, you'll see the narrative and it'll make sense to you. But any which way, that was not a great setup. However, it did exactly what a 4x trade should do. When we took out, let me put the bars on it, the Gann bars. Once we took out this previous day high, we got very clean A, B, C, which gave us a very tight risk bar. This risk bar was 98.08, 39.47, so call it about $2 higher. I remember 99.96 was 4R on that. 99.96. So it looks like it went a little bit further, probably about 6R on that trade. But again, this was not a great setup from the daily perspective, so it kind of caught me by surprise. I wasn't able to do the regular size that I would normally do on that. The Russell is another one where, today is just an inside day, which means the count does not change. We're still in a downswing. At the time that we broke the high, things looked very impulsive in the morning. And once we broke this high, we did get a very clean ABC down. And this is on a 1 minute, because again, we broke this high a couple of minutes after the open, and then 10 minutes after the open, peaking down to about 15 minutes. So it's a very active time of day. So the 1 minute was appropriate for that market pace. And again here, taking this height of 380, I think the right about 29 and change is where we hit our 4R, and we did get the 4R. And I often wonder if algos basically are going for such targets, because in theory, the actual price of anything doesn't matter. It's all about what did you risk and what did you make, and what are your odds of getting that. And if algos are programmed that way, they could be the marginal person taking profit up here on a trade similar to this, thereby causing the sell pressure. After that, we had a couple of good setups in gold and silver, and this was just is this today? Yes. Okay. So after the big move up yesterday, we would expect at least a little bit of a test. In fact, this is kind of a vol compression pattern. It's not the prettiest one, but you can see this cup, you can see this pullback, and it led to a little more upside. This isn't the kind that I would think would lead to a lot of upside, but just recognizing the pattern that's there. Higher low, higher low, higher low, higher low. That's typically, a bullish scenario because people are willing to pay higher and higher prices and not allow it to go below that. So in here, the pattern was the 5-minute ABC. And again, it was very clean. A, B, C. And then this is your risk bar down here. And 4R was up to 68, I'm sorry. So got a little bit more than that, probably about close to 6R on that. On silver, gold had a very similar pattern, but it did not, one, it did pierce previous day high, which made it look a little better than the silver pattern, which had not pierced the previous day high when it set up. But here we ended up with a 4-bar hoagie at the bottom and also a somewhat wider bar. So we did not quite get to 4. We got over 3. If this was about 4.1, 12.3, 80.6 would have been 3R. But we did stop shy of 4R on that. And let's see, what else did we have today? There was something interesting to note in natural gas. So if we go back to our homework here, natural gas is on an extended run, day 7, day 8, day 9, today is day 10, which makes it a very hard market to fade. And if you look at, let's see, on a 5-minute, early in the morning, we tried to push up to the high and couldn't, tried to push up again and couldn't, and we got this big flush. And remember, when the real direction of a market is up, you're going to get a very powerful one-legged flush down. And that's kind of what we did here. We got this flush down here, and it stopped at exactly round number 6.60. And you can see the kind of volume that was there on it. But now the subsequent bars didn't test lower. Instead, we formed a hoagie. And what this looked like on a 60-minute chart was an ABC. There's your A, 1 bar made a marginally higher high, this little flush here, and then this was our ABC. And probably got about 2R here, that was about 12, so 84, 96, yeah, just shy of 2R on that hourly setup. And then interesting to note again, every time the market pushed back down and tried to take out this low is 6.600, we got to 6.601, one tick above. Couldn't get below. It's this bar right here. Decent volume, but that area is being protected and it keeps getting pushed back up. It came back down, get pushed back up. We are on an extended run, so if anything, you would give the benefit of the doubt to the long side. What I was looking for was if this were to close red, which we still have some time for it to do, this is an anticlimax pattern, and that might actually make it worthwhile to do a Forex trade tomorrow if we take out today's low. Hasn't happened yet. Don't see it yet. Need this to be red. And let's see, crude itself. I like this wedge pattern that's broken. I think subsequently taking out tomorrow's high can also set up a 4x pattern because today is only the first day up on the rate of change. So that could go higher. We had seen a lot of compression here in this oscillator, which tends to lead to an explosive move. And if anything, we had kind of a false breakout to the downside, which often sends us thrusting through the upside. So between that and this, I guess this is on the 480 minute, the wedge, same thing on the 240 minute, I'd be more inclined to be long this market. Gold and silver, they've had a reasonable move up. Gold now has 3 PF3s, and today's action flipped it down. So I don't know if it's going to make a great short, but I'd probably just stay away from the long for a day or so. And the same thing on silver. We've had 4 PF3s up. It hasn't flipped down. It's acting a little stronger than gold. But I don't want to be Johnny come lately on the 4th day of the rally. So I'd rather wait for a pullback and see what we get there. Australian dollar was interesting. It had this outside day, which doesn't change the nature of this pullback yet. If we were to take out the highs tomorrow, that would set up a good Forex trade, and in part because we also have this little divergence right here on the 2-period rate of change. We had a PF3 down, which didn't make a whole lot more progress, and we flipped back up. So Australian dollars in play for the Forex. And then on the indices, they're kind of a sloppy mess right now. Structurally, we do have a clean ABC, but we don't have what looks like a good setup bar. If this had closed green, maybe in the upper half of the range, that would have been a good setup bar. Currently it's not, so just in wait and see mode. 2 PF3s, and the PF3s aren't getting all that ugly. So something to note in your daily narrative. That's about it. Just want to again go over bonds, and every time the market tried to get a little bit of footing, bonds would just keep pushing down. And this is now 5 days with the 2-period RSI less than 5. 1, 2, 3, 4, 5. And intraday, you could see how initially we gapped up and there was promise, but we could not get above the previous day's high. Couldn't even get to it. The actual high was 124.19. We got to 124.16. So there's definitely some sell pressure up there, keeping this down. We didn't go make new lows. It was inside, still an inside day, but it kind of feels like we're going to need the foot to come off the neck of bonds so that we can even just get a little bit of a reflex bounce. And I think the markets are going to need that to breathe a sigh of relief, because right now it has been a one-way trip. This is the yield chart, and I guess arguably there's a little bit of resistance here, but there's not really a swing high until we hit 3.25, and we're only at about 2.7 right now. So maybe we live in interesting times. We'll see what happens here. So anyway, please drop a like and subscribe and ask me questions. Happy to go over these setups.